As we have told that all our panel discussions are now confined for 25 minutes, because as long as we have hungry minds, we do not want hungry stomachs at the end of it. So we've requested our panel to keep it short and concise so that we can all manage a little bit on the time. On that note, allow us an opportunity to now call upon for the next conversation around AI-powered credit revolution, transforming credit access, risk models, and digital lending. AI is truly reshaping credit underwriting, alternative data models, as well as the fraud analytics. This session explores how AI-driven credit systems can expand inclusion while maintaining prudence, governance, as well as systemic stability. On that note, allow me an opportunity to first of all call upon our moderator of this conversation, Dr. Vaibhav S. Joshi, co-founder and CEO of Table Turn Tech. A seasoned BFSI leader and a fintech strategist, he is recognized amongst the global top 100 CDOs and top fintech influencers in India. He specializes in digital transformation and financial innovation. Please give him a big round of applause as he's agreed to be with us, and thank you so much for joining in. We would now like to quickly call upon our panelists, starting with Dr. Anish Kumar, former MD and country head, Bank of New York, India. Dr. Anish is a seasoned banking leader and somebody who currently serves as an independent director across multiple boards, advising on governance and risk frameworks. He's also a LinkedIn top voice and C-suite mentor. Thank you so much for joining in. Let's give Dr. Kumar a big round of applause. We also have Dr. Suresh A. Shan, the founder, MD, and CEO, who's joining in from SAS BITS. He's somebody who's a technology and management leader with deep expertise in AI, IT governance, and of course, ESG and enterprise architecture. He actively contributes to national academic and regulatory platforms, a published author, and an innovation strategist. He drives technology-led financial modernization. Please give him a big, big round of applause. Always such a pleasure having him on board. We also have Anish Chaudhary, Chief Business Officer of IBDIC, a seasoned CXO and a P&L leader with strong expertise in transaction advisory and digital transformation. He's somebody who's built and scaled high-growth business units while driving the profitability and operational excellence. Also, as a startup advisor, he mentors emerging vendors and ventures across towards sustainable growth. We're truly elated that Anish is here amongst us, and please continue that applause as we thank him for his company. We also have Usha Mahesh, I believe. She's not around? Okay, thank you so much. And I won't take much of your time. I think you've got such a fabulous panel ahead of you. Over to our moderator to take it forward.
Thank you so much. AI-powered credit revolution, transforming credit access, risk models, and digital lending. That's a very interesting topic, and we have a very, very interesting panel over here. I think it's good that Usha couldn't join us. I can see the time has gone down by 15 minutes. Sure. So setting some context, and I'm going to set up, three very critical points that I have noted over here from where we'll pick up the panel discussion. So one is the traditional credit model struggle to reach underserved segments, specifically when you talk about MSMEs, rural agri enterprises, or first-time consumers. Second is AI can transform credit underwriting, risk prediction, fraud mitigation, loan servicing, and loan origination, enabling both financial inclusion, portfolio quality improvement. So we'll probably dwell upon how various facets from technology to product to business and to partnerships can, take advantage of the same. And the last is the regulatory landscape, where we all have seen that, our regulator is by far ahead of the entire world and walks hand in glove with the market, often leading the market at all times to, power new products, new tech-based products. With that, we will move directly into the panel discussion because of the lack of time. And we are going to start with Dr. Anish Kumar. The first point that I would like to discuss is the diverse credit market, where we can see that AI is already making big impact at a widening level. Now, based on experience on global frameworks and institutional lending, where do you think lies the asymmetry when we talk about AI? Where do you think AI is really making the difference? And we would like to also, we would like you to dwell upon some of your snippets from the experiences that, past 40 years we have seen that.
Thank you. Thank you. Good afternoon, everyone. Let me tell you a simple truth. In India, credit hasn't failed because of lack of intent. It has failed because we never knew too much of what we wanted to do. What I basically am telling is that we have not interpreted the information or collected the information that is material. Even 40 years back when I was a credit officer, when I was looking at the balance sheet, it's the same thing. We looked at static stuff. Now everything has changed. Let me give you an example that happened about 4 years ago, real life example. Two of them I want to quote before we start talking further about this. This happened soon after COVID in Surat. So one of the Kirana shop guys doing excellent business, he went to the bank he was dealing with. He used to have 4 to 5 lakhs of balances. So he wanted a 20 lakhs loan. And bank asked him for some evidences, papers and all. He said, I don't have. So he was rejected. He went away. And 3 days later, the credit officer who rejected the loan moved his house to a place where this Kirana shop was. And that evening he goes to the Kirana shop to buy bread. And he saw more than 40 to 50 people standing there queuing up to buy things from him. And then comes a supply of in a tempo. Everything was offloaded. They didn't ask cash. They didn't do anything. He went away. And there was a guy sitting and writing down all the UPI payments. Then he said to himself, this guy has business. He doesn't have documentation. That's an asymmetry, right? Asymmetry, I call asymmetry information as something that the client or the borrower knows his financial reality, whereas the lenders don't know. Same thing happened recently, 2 years ago. I was in Thane and we were talking to a couple of bankers. The one fellow was talking to his boss. He said, no, I rejected the loan. I said, what was the loan about? He said, it's about a lady who supplies food to people. And 4 days later, he looks up his WhatsApp business page and he found she had about 217 clients. She had orders after orders. She had monthly subscriptions. She had orders for the upcoming festivals. She was doing well. The sad part is that the information that she had never made it into a format that could enter into the credit system of the banks. And this is what has happened. So for decades and decades, we have relied the credit assessment or financial analysis on audited financial balance sheets, collaterals, and credit bureau scores or tax payment slips. Now, when you have MSMEs, you have women entrepreneurs, you have small supply chain companies, they don't have pristine financial balance sheets. What they have is a lot of information around them. What AI has started doing is doing something beautiful, not very glamorous though. It is trying to tell you a story which you have not seen or heard before by helping you read the signals around that persons. What do the MSME guys have? They have GST filings, they have UPI credits, they have stable supply payments, and they know what they're doing. There's a live example in Trichinapalli, 7 kilometers away from Trichinapalli. We are trying to teach a widow set up a shop, a Kirana shop, and we are teaching them through cards how to create an inventory holding and how to tell when the inventory is less. 4 months later, she told me, I've become a CFO. In the sense that the information available around her were collated. We taught her how to bring it to books. So this is where we are lacking. Now, with advent of AI, we are seeing lots and lots of things that have been changed. The information that was otherwise available but we did not integrate the information or we did not read those information are being collated. So the asymmetrical information is being created into a story or weaved into a story which works with the banks. Now, if you look at gold loans, most of us know gold loans, geographically there's a history, behavioral history, repayment history. It's different from what happens in Kerala and what happens in Chandigarh. The loan to value is now being fixed on these behavioral aspects. So what AI is trying to tell you is that apart from the behavioral economics, there is something else you need to know, even based on the geography. And it gets far more interesting when you look at the agri sector or farms, when you go to agricultural loans in some of the places. They have ability, even I saw one of the banks do have this ability. They can track geostationary images and tell, okay, this is the time when it is going to rain. This is the time you can sow the seeds. This is the time you want to reap. They can even understand the soil content, the water levels. Everything is being said in that is collated to bring about the loan repayment structures. Now, let me tell you this. People are tracking Brazilian frost. Brazil is the largest producer of coffee in the world. And when there's a Brazilian frost, coffee supply dies down. So most of the farmers in Coorg, Chikmagalur, Hassan area have been asked to produce more so that India can make money out of it. This wouldn't have been possible if we were not tracking the geostatic equipment. Rainfall activity has been tracked these days. So all these are information otherwise available to us for long number of years, but we didn't see that or we didn't interpret it. We only relied on static information of financial analysis, the balance sheets, audited balance sheets and otherwise. Even that we made a lot of mistakes. So, but then what this AI is trying to do is that it is throwing up data, and let me tell you, interpretation of data is up to you. It will throw up, but AI will not be the one who will judge the actual risk. It will only throw up the risk. It's for you to understand whether you want, how do you want to judge this. So data doesn't mean, like I said, I have a big issue with data. There is a bank which was trying to develop a loan mechanism based on all the data that we see today are past data. Past data, based on the past data, they started doing financial inclusion activity. What it ultimately turned out to be was financial exclusion activity. It has a data bias which nobody understood. We don't do auditing of the data. My biggest problem in India is we have large data, we have shareable data, we have refined
Dr.
data.
Anish, I think we should keep that for the next question.
Okay.
In the interest of time.
Thank you.
Yeah. Thanks for a very comprehensive, few points. And I agree now, with respect to MSMEs, there are a lot of cash flow-based loans. Platforms have started doing that. We know PhonePe, Paytm, etc. BharatPe, they have been doing that for the small, MSMEs. Anish, coming to you, your deep tier forensic platform uses digital infrastructure to unlock credit across supply chain tiers. How does AI assist in creating trust and assessing risks in these deeper tiers?
Sure. I think just continuing your question and what the thread he was talking about, I have a very contrarian view. I think we will have death by data rather than, paucity of data. But I also agree that it's about putting it all together. So let's quickly look at the construct of the Indian industry. We have got 7.3 crore MSMEs on Udyam Aadhaar. Around 1.5 crore have access to formal credit. One of the key needs of MSMEs, and the UK Sinha Committee report 2019 talks about it quite extensively, is that they need cash flow-based funding. Now, what is cash flow-based funding? One of course, is you have GSTN data, banking, UPI, various other transaction data and models. AI will help there. But you also need core digital infrastructure to solve for two things. One, providing access, because you can have fragmented data, but if you don't have access to supply chain financing products, because ultimately majority of the needs of MSMEs are working capital finance, whereas they are subjected to accessing term loans. So how do you make supply chain financing ubiquitous? Number one. Number two, given DPDP coming into picture, given that most of the models, in fact, the 2047, the budget talks about data centers, are the data going to reside more with large tech companies? How are banks going to access it in a DPDP compliant manner? These are two infrastructure problems that need to be solved to achieve what we are talking about here. So at IBDIC, which is basically a company owned by 18 banks, almost 85% of the banking sector owns us, so to speak. We are building the infrastructure for supply chain and trade finance. And what you spoke about, deep tier financing, is essentially about ensuring that the smaller MSME who doesn't get access to working capital finance, because most of the banks, by the way, are chasing the AAA or A-rated corporates. So let's look at the dynamics. Even if I have enough data, are the large banks ready to lend to the smaller folks? Because there's enough and more demand even in the top echelons, number one. The smaller banks would not have the resources to invest in CDPs and large tech platforms to make sense of that data. So we have an infrastructure challenge. And therefore, if you look at the India AI mission, which talks about certain investments, but even what RBI, IB, and various other initiatives are underway, especially the public sector banks, some of them have done a stellar job to provide the deep tier, or for that matter, last mile. I think there are 2-3 things that are very essential. So how we are doing it is, A, we are building the core infra for trade finance. For example, the Bharat Trade Net announced by the Government of India in the last budget. IBDIC is actually the strategic development and implementation partner of that with DGFT. And now that will make sure that both pre-shipment financing and post-shipment financing is made available. And the AI rails and data will flow in a tech stack which will be interoperable across government ministries and across data pools in the country, leveraging AA and other methods as well. Plus, it will provide interoperable standards across cross-border so that you can get enough intelligence about the importers out there so that the lenders here can take calls. And similarly, when we talk about deep tier, even if as a large bank I'm comfortable making an A-rated corporate as my anchor, can I do deep tier basis that? So I'm not getting into the technology aspect of it. AI is going to play a crucial role even within these platforms by ensuring that all the documents, data, they are available digitally in a much more reliant manner, 360-degree intelligence, etc. But the larger piece I want to make here is that it's not just about AI models and data, it's about putting it together in a cohesive manner, and that's where DPI will also play a very crucial role.
Very interesting, Anish. I look forward towards it because we all know that, trades has been there for a while. And supply chain finance, like you rightly said, has always been anchor-led for most banks, where banks pick up anchor and then get into the distribution. So looking forward to this model. Dr. Shan, coming to you, from a tech and data science perspective, what are the challenges of integrating AI into the credit process, especially around data quality, governance, model explainability?
Good afternoon, everyone. In India, especially, you see the digital transformation is moving from corporate digital towards the customer digital, where every individual customer is treated as corporate. So if you see post-COVID, enormous work has done where everybody has realized how to empower the customer, where they can treat the customer as corporate and try to evolve the solutions part of it. Where if you see digital today, everybody speak about technology, but they have missed out major thing, which is business, where the technology has to enable an earn-to-pay model. We have to make them to earn so that they can pay for us. For example, if you see the people who have taken loan for automobile, the data, whatever it's part of that and nearby that, which we have to share to them so that they can utilize the data, ensure like whatever it's going to make part of it to be enough in terms of settling that loans or paying back the loans. Those are the areas where data has to get improvised, where we do have something called community cloud. During COVID, we can see customer will decide which finance or which rate or which he is comfortable with. Where those are something which is very unique for technology, where a common man, or you talk about a farmer or rural India, where people are trying to utilize such solutions where they can empower themselves, they can try to build as much as part of the intelligence, and intelligence should have an authentic information. That's what the reality, where banks are struggling today to get that as much as information which is part of the social, which is again right and relevant, which empowers them to create an earn-to-pay model. So, and if you see in terms of community cloud, we can see a lot more in terms of transformation which is happening, where even regulators now, they are trying to find out how we can still get as much as impact which can ease that and simplify IT in rural India. So it's a lot more in terms of understanding the available and affordable technology, which again you call it as infrastructure, and trying to build to create an earn to pay model where the businesses has to grow at the end of the day. And post-COVID that people realized corporate digital keeping the internal stakeholders or the internal which they are trying to use automation is not going to beautify that environment, rather than bring out the customer value system, empower the customer who can ensure his business and create an earn to pay model so that he can pay back and try to run the solutions for a long time.
So let me stick with you, Dr. Suresh, on that one, and let me move to the next section where we are talking about AI-driven risk models. Okay. So what are the core technological and ethical guardrails that must be coded into AI risk model to reduce bias, to build trust among lenders?
See, in India, e-business is less to do with electronics, more to do with emotions. Until your system is not catering to the certain end last mile in terms of what they are supposed to do, what they are looking forward for the system, that's where you can see a lot more potential which is coming part of the system. And again, if you see risk has to be as in terms of how to ensure like the last mile in terms of the people business also grows together. So if you see the technologies what are today, especially from artificial intelligence, cyber security, everywhere it has a cross function and it has a 360 dimension in terms of impact, not only part of the business, it indirectly gives you a credit rating in terms of how things behave in the last mile, how trying to build that, we call it like belief behavior, which is the best business benefits, which is part of Bharat. So that essence has to be paid out and ensure like how emotions can be captured and try to use as much as not just technology, align with the people and create that system in terms of reaching out. Like speed and reach is going to determine as much as in terms of the technology solution. That's where the reality comes out and people try to build out and the kind of share and care. That's again banks has to get internally to get like a customer who is already engaged with a particular bank and try to establish his things from his age, like whatever happens from a normal starting with a small and getting into a long term in terms of the process and the money related all expenses, not only from business side, from the personal side in terms of insurance and other part of elements. It's going to be a one-turn shop in terms of using the digital, empowering as much as on the last mile.
Yeah, I can see that power harnessing into the way, a lot of these lenders are now using data at the back end to process that. For those of you who are watching the T20 World Cup, you would have seen, there is an advertisement coming of a guy who has a phone in the hand and everyone is, stand still. So there is a carpenter, there is a plumber, there is a painter, they are all stand still, movers and packers. And this guy says, avail loan 5 lakh rupees. The moment he clicks on avail or apply loan, everyone starts working. It's, I think, MoneyView app is doing that loan. So if you haven't seen it, then do see it. Yesterday it featured multiple times in the India-Pakistan, encounter yesterday evening. And for those who don't know, there is a T20 World Cup going on currently. ICC. But having said that, now imagine, so those are typical, now 5 lakh is a larger size, but if you look at the smaller segment, the bullet loans, okay, and where the decisions actually comes in minutes, how does it happen? There's a lot of AI that works at the back end, and the AI is not just about creating a scorecard or creating an alternative scorecard or, doing an API hit to check your CIBIL, CRISIL or bureau data or, to do your PAN, TAN, GST validation or, your Udyam, Udyog Aadhar, if you are MSME, so on and so forth. Not just that. Today, AI has actually got into the processes where bots actually sieve up from process A to process B, speed up that entire thing so the entire underwriting, the credit underwriting is done in a much more faster manner. A CAM which used to be created, which used to take, probably days in the traditional format, today gets created and approved within seconds, if not within minutes, if not seconds. Okay, that is the power of AI that has been happening, and I have these conversations, and sorry, I'm just trying to sum up my thoughts as well before I move on to Anish and Dr. Anish for the last closing remarks. AI has always been looked upon as probably it's a bot. Okay, which is going to be a conversational bot, probably, agentic AI, because that is probably a more widened use case, but that's not the case. If you actually look at the operations part of it, AI is doing a lot more things at the back end than just, stitching things together. Anish, moving on to you, and with context to the same question that I asked Dr. Suresh, Dr. Shan, and in the interest of time, IBDIC works with lot of RBI and regulatory frameworks. Okay, what learnings can you share from the sandbox outcomes that probably can fit into today's AI landscape and on the credit side?
I'll just not restrict to sandbox, but I think there are two, three things. One, I see a tremendous agility at the side of government and the regulators in India to adopt AI. I think the big India AI summit that's going to happen, the AI ethics framework that has been released. Recently, we're talking about social media tagging of fake content. One can debate either side, but there is a lot of agility that I see at the government and RBI side. What I do not see, and I'm actually worried, is that, as you rightly mentioned, there's a lot happening on the conversational AI, etc., some remarkable results, but it is still very, very early days in terms of adoption. And I'm seeing this across the banking industry and NBFCs. I can tell you 80 to 85% AI projects have not even yielded the results. And the reason is very simple. One thing, learning that you spoke about, two things I'll quickly sum up. One, AI is a horizontal. Our organizations are designed to work in silos. And what AI is pushing everyone is to become a generalist, to be able to think laterally outside their comfort zones. And Indian organizations are not thinking horizontally yet. It's a massive org change that's required, right? Then follows data, tech, etc. I'm not even getting into the operating bits. So we have a long way to go to really harness it. The organizations which are successful are doing that, but majority are still far behind. And the second part is sandboxes will only work when you allow the changes that are, the exceptions that are allowed in the sandboxes to also come into legislations in real world. And I think that is something India has got a lot of sandboxes, SEBI, RBI, various other regulators. But the common feedback that, the industry has given is please allow those exceptions which you allowed in the sandbox to also work in the real world. Otherwise, it still is just a pilot, right? So I think some of these are the takeaways, but nutshell, great work happening in the country, but are we really prepared? I think there's a lot on the table yet.
Dr. Anish, your closing remarks, please.
Oh, sorry. I just landed after a 42 hours flight. So I forgot that mic was with me itself, sorry. Anyway, so anytime there's a credit decision that AI does or a pricing decision that does, what it does is there's an element of capital allocation, right? When there's a capital allocation, it's a fiduciary responsibility. And when there's a fiduciary responsibility, there has to be ownership. The one thing that I've seen in many committees is that somebody asks who approved it, the model approved it, there is no ownership. There has to be a clear ownership of this responsibility. A data scientist can't be owning this. Somebody who understands what's going into the model, what is the bias, have they done a back testing, have they done a stress analysis, like we do for all treasury bonds. We need to do a stress analysis for that. We need to do a sensitivity analysis. We need to know what's the drift analysis which we can find out. Unless we do that, we are going to get into a little bit of trouble. So, which also brings to the fact that last, I think, 2 sessions ago, somebody brought this issue. It's about skilling people for AI. And they need, if they don't know, we are getting into mess. So I think there's a lot of responsibility thrust on all of us in this room, as well as the regulators and the institution, that we need to do this very carefully. I'm still worried about the data. So unless we have trusted data frameworks, this is going to be difficult for us.
I always believe that, regulations play a very important role when it comes to data, when it comes to AI and the future of AI, because in a non-regulated, semi-regulated or a little bit unregulated environment, AI or rogue AI can cause disaster. It can be devastating. Having said that, the better side of AI, there are some very, very interesting use cases, and I can see the time's up. So maybe a possible future scenario that I will leave you as a food for thought. Just imagine, we all have our car insurances, we all have our health insurances, and our car insurance only kicking in when activating the time we are driving the car. So we don't end up paying for the entire year, okay? But for the number of kilometers that we are driving. For somebody who drives the car on the weekend, the car insurance actually only activates when the car is running. For somebody who is driving every day, these things can happen with the power of AI. There is already fitness, health insurance, which has come in, where, your premium can go down depending on the data that, your smartwatches are giving. So having said that, we look forward towards some interesting use cases on the credit and the lending side as well. And that's all from this. That's all. The time's up. Thank you so much.
I just want to add one line. In a year's time, if somebody comes and knocks at your door at 12 o'clock in the night and said, "Sir, take this tablet, you might get a heart attack, please take the medicine." Please take the medicine, because your data is outside, they know much better than you know of yourself.
And next
That's
time you order a Domino's or some fast food, and if you are, high on blood pressure, high on cholesterol, the order needs to be auto-rejected.
But I just hope these are all DPDP compliant when they come knocking at your door.
Thank you everyone.
Thank you so much. And with that, if I may request our panelists to please step forward, allow us an opportunity. Mr. Porwal, if you can join us and allow us an opportunity to give the token of appreciation to all our eminent panelists. We have one more panel discussion after this, ladies and gentlemen. May I request all our delegates to stay back. We've got the final discussion. Dr. Narendra, please to join in for the felicitation. It's always the duo who works together, the partnership between N-Cube and SPA. And may I please request all of you to step forward and allow us an opportunity to continue with the knowledge sharing, but at the same time, if I can request our audience members to continue with that applause for all our panelists.
I am very grateful to all of you that, of course, our earlier inauguration function took little higher. Otherwise, our Bhavana Bhatia is always strict in time management, and partly I also am strict in time management. One request to you that food is ready, but be part of the next section. Then we will finish the food quickly, because each of the section panelists are also waiting, and some are on online also. For that purpose, my special thanks to you. Thank you. Please.
Thank you so much. Thank you so much. And